Hello, everyone. Welcome back to Navellier Market Buzz, episode 9. I'm Crystal Navellier. I'm joined again this week with my father, Louie Navellier. We also have a special guest, Jason Bodner, who sells quantitative stock research to institutions and professionals, a contributor to Navellier Marketmail, and also is an editor at InvestorPlace. Welcome, Jason. It's so nice to have you.
It's great to be here. Thanks so much for having me.
Jason, my dad was explaining to me that your big money index or BMI was overbought. Can you
Hmm.
talk about what is behind your BMI tool and what is now signaling?
Sure. So probably the easiest way to describe the big money index, it's a powerful, it can be thought of as a powerful market timing indicator. What we do at Map Signals is we try to recreate with algorithms unusual institutional money flows into stocks and out of stocks. And when I say unusual, it's really got to stand out and jump off the page. So we created buy sell signals for when stocks sort of behave out of the ordinary. So if we can measure the level of unusual buying versus selling on a daily basis, we smooth that over a 25-day moving average, and that gives us a real great indication of institutional money flows in or out of the market. Now, what's really worthy of paying attention to are two times. The most important is when it goes oversold. That's when there's unsustainable selling and everybody's throwing out the baby with the bathwater, and we see a big reversion signal ahead. And that's been historically very accurate. And the second one is when it goes overbought. And all you can think of like that is there's just so much buying that it becomes unsustainable. And either the market's got to pause or it's got to pull back or sellers take control. There's a lot of question marks that come. So what happened is about 5 days ago, the big money index went overbought. Now, that doesn't mean we should run for the hills and sell our stocks, especially ahead of a seasonally very strong time of year. But it does indicate that the market might pull back. And I have some facts and figures for this. So that's a relatively short period for the BMI to be overbought. Normally it's 22 days. This time it was only 4. But typically, when that big money index falls out of overbought, 1 week returns for the S&P 500 are down 1%. 2-week returns are down just about 1%. And going out 1 and 2 months, it's down 1 and 2%. So even though that's not a huge pullback, it's indicative that we can expect some weakness on the horizon. And especially ahead of an election, potential for October surprise. Who knows what's going to happen? But I would say it's a buy the dip opportunity. That's what the data is telling me.
So now let's talk about Tesla. Did Tesla's better than expected earnings deliver the spark that the market needed?
Oh, absolutely. The market was in a funk until Tesla announced its better than expected earnings, and they were spectacular. Operating margins are up sharply. In fact, the best they've had in 18 months. You've got sales were up. They reclaimed the EV sales leader crown from BYD. And of course, earnings beat expectations. Guidance was good. Now, their sales in China were especially strong, and I think that's what got everybody excited, even though their sales in Europe were weak. And then finally, their energy storage business is booming. It's now 10% of their sales, up 52% year over year. I'm in San Diego County here, where when you do install solar, you really do need a power wall. And if you go deeper in the California valleys, people install solar. And if they don't have power walls, sometimes the utility doesn't want to hook them up because they have a surplus of solar. So you actually need a power wall for your solar system to work, period. And Tesla does that. They make the big commercial battery facilities that California's keeps installing to store all the excess solar electricity they have. And then finally, their FSD, or full self-driving software, sold a little better than everybody thought. So it was a wonderful report. And and finally, the Cybertruck is number 3 in sales. They're all over California here, but and it's profitable. So that was a big turnaround. So everybody's excited about that. There are no drags on Tesla at this time. They did further delay their sports car. So if you have your $50,000 deposit and haven't gotten your car for the last 8 years, you're probably slightly annoyed. But they did say that it's not their highest priority now, but it will be coming. And thank you for your deposit. That's what they said.
Yeah, I mean, my perspective is it certainly provided the spark that Tesla needed. That stock too has been in a funk. It's a bellwether. It's a Nasdaq leader. It's one of the Mag 7. It's highly watched. So I think a lot of tech stocks take their cues. One thing we can take away is it fits right in the camp of companies beating sales and earnings. I think the latest stats from, I look at FactSet. I think about 75% of companies that have reported for quarter 3 have beat earnings. About 62% have beat sales. So, when the big bellwethers do that, it's really meaningful for the market. I mean, this is a company, phenomenal 1 and 3 year sales and earnings growth. They're a car company that makes a double-digit % profit margin, which is rare. They have 4.3 billion of cash, less capex, so they're flush, they're healthy, and they have positive 1 and 3 year sales estimates. And the stock's up 1,100% in 5 years. That's a trend I wouldn't want to fight. So I do think it provided a good jolt to the market.
All right, so let's talk about some other stocks, CRS, DEC, and FIX.
All beat, except for FIX. FIX beat on earnings, but they did not beat on sales. So that stock went down 10% on Friday, and I bought more. Now, I should explain what FIX does. That's comfort systems. And oh my goodness, their business is booming. Their order backlog is booming. That's just part of building out the cloud, the data centers, and of course, a lot of the utilities that we have to expand the electricity generation. So as the cloud grows, comfort systems FIX grows. CRS was incredible. I own it. I believe Jason owns it as well. And then finally, DEC. The shoes are selling like crazy. And I believe that especially the Hoya brand, so they beat and gapped up. So this is what earnings season is all about. The only one that, we technically had a miss on was comfort systems, not on earnings, but on sales. But the order backlog grew, so I bought some more.
Yeah, these are 3 great stocks. Something else Map Signals does, very similar to Navellier's Grader. We have a scoring system. So I sort of live and die by the scoring system. If it's above a 70, it's typically a buy. But then we further break down the scores to technical and fundamental. And fundamental includes things like 1 and 3 year sales growth, profitability, debt levels, things like that. Technicals are how it's trending and really what kind of money flows are behind it. Carpenter, is a specialty metals company. As Louie mentioned, I own that, one of our portfolios. Phenomenal sales and earnings growth. It's trending higher. It got a 77, so that's right in our sweet spot. Deckers, Louie, I think they beat earnings by 29%. They really shattered earnings, and they beat sales estimates by 9.2%. That explains that massive gap up on Friday. As you mentioned, they do footwear. This is a 74 ranked stock, very, very strong. FIX was the only one that wasn't a 70, it was a 67.2. But like you said, Louie, it's not because of the fundamentals. The fundamentals very strong. It scores a 75% in my model. The technicals are weak, and that's just mainly because of the reaction on Friday, or I should say the overreaction to earnings. It does look like an interesting buy. There were 2 more stocks I wanted to mention. Also, I hold them in managed accounts or newsletter portfolios. Celestica is an amazing stock. They do electronics manufacturing technology. That's all about the cloud. This stock is on fire, phenomenal 1 and 3 year sales and earnings growth. They have a low but growing profit margin. They have solid estimated sales and earnings growth for next year. And they too crushed earnings by 19.5%. And then a new one that just popped up on my radar, is LRN, that's Stride Incorporated, and they basically do proprietary software and educational services. Again, just phenomenal sales and earnings growth, profitability, trending in the right direction technically with big money inflows. This stock scored about an 83. So it's another winner. And this one shattered earnings expectations by 327%. They reported 94 cents a share versus analyst expectations of 22 cents. They beat sales estimates and they provided really strong guidance. So it's another interesting one. And they have an earnings history, 8 earnings reports in a row. They beat both earnings and sales estimates. So it's one to keep an eye on.
Well, kudos to you, Jason. Those are great stocks. That's what earnings season is all about. I should add, we also own Celestica, CLS. And when our two systems find the same stocks, it's usually a lock.
So let's shift to economic news. What do you expect from the Conference Board's Consumer Confidence Index on Tuesday?
Well, we just had the Michigan Sentiment Index rise, which is good. And I like the Conference Board survey better because it's just more detailed and has a better record. It should uptick because we had a very strong retail sales report. 10 out of the 13 categories are up, and gas station sales were down. So when you consider that 10 out of the 13 were up, that's a very, very good report. So it should be rubbing off on consumers. Consumers obviously want to get the election over with. Everybody's voting early, and I will be relieved when the election's over because I'm tired of getting texts from everybody. And so that's the Conference Board will be good, and they keep raising GDP estimates higher, and that's one of the reasons rates are going up is they're anticipating a stronger economy.
Is the October payroll report on Friday expected to be better?
Yeah. There are some seasonal adjustments. There might be holiday hiring. We'll get a feel for it with ADP on Wednesday. We also want to keep looking at the manufacturing jobs. They actually rose a couple thousand in the previous month, but in previous months we've been losing or shedding manufacturing jobs. So, but the payroll report's always a big deal. That's all. And we want to see what the unemployment rate is as well. But the government does have these weird seasonal adjustments as we hit the holiday shopping season. They will probably think that we have to hire temporary workers instead of shop on the internet. I don't ask me why the government's is so far behind on their seasonal adjustments. So there could be some weird things in there, but right now it's forecasted to be a very strong report.
And on Thursday, we get an update on the PCE report. Is that expected to be good?
Yes. That's the Personal Consumption Expenditures Index. There is a fear of rising inflation. But if the PCE comes in good like we expect, then the inflation fears will continue to diminish. Inflation is dead in Europe. It's 1.7 and falling in the Eurozone. It's fallen all around the country as well. And finally, owner's equivalent rent, which is shelter costs, started to come down to reality. Home prices are being cut everywhere. And the only places that have rising costs to live are New York, where you are, and Baltimore, which is being regentrified.
It's interesting. A lot of these macro items you're going over, from my perspective, they're all just pointing to the fact that our economic data is strong. I think all the pundits in the beginning were talking about a hard landing. Well, first they were talking about a recession, then they were talking about a hard landing, and then they were talking about a soft landing, and now they're talking about no landing. So clearly the economic data is strong. It's carried us through. It's continuing to trend in that direction. So for the longer term, I'm encouraged by that, which sort of still fuels the almost surety that rates are going to continue to fall, which is a great economic backdrop for stocks. But this is sort of throughout, the rest of the year in 2025. So I always find it fascinating, the market's reaction to these individual reports. And Louie, you always seem to be way ahead of the crowd on those. It's pretty phenomenal.
Well, I used to work for the Fed, so we used to live and die by all this stuff, and then we'd swear about the seasonal adjustments, which can be significant, you know. As you may remember, the government overstated jobs by 818,000,
Oops.
trailing 12 months through March. So they do have adjustments to these figures. So it's always interesting.
The Beige Book survey last week was kind of a buzzkill. Can we talk about it?
Yeah, it was a buzzkill. Five of the 12 Fed regions said the economy's not growing or contracting, and that's better than the previous one where it said 9 out of 12 said that. But that just means they're going to cut at the next FOMC meeting, which will be 2 days after the presidential election. And they'll probably also cut in December, but then in December we get a new dot plot. And then we'll see how many cuts, if any, they're going to have in the new year. The previous dot plot plotted out 3 more rate cuts next year. But the problem is rates have backed up.
Speaking of rising rates, one of our subscribers was asking about the rising treasury yields from the Trump trade causing the Fed to postpone additional rate cuts.
Yeah, again, they'll cut this year because they've already telegraphed that. They're still way above market rates, but the rate cuts next year might be in jeopardy. So the whole Trump trade emanated from Europe. I guess Europe's expecting Trump to become president. That's what it looks like in real clear politics. So even if Kamala does okay on the overall vote, Trump just looks much, much stronger on the electoral college. And now there's 3 Democratic Senate candidates basically saying they're not for the Biden administration policies, including Senator Casey in Pennsylvania, because he said he was pro-fracking when Biden was not. We have a senator from Ohio and a senator from Montana. So that sends the wrong signals, and it's going to be tough on Kamala to win those states because their senators are pushing back against the Biden administration. But back to the Trump trade, even though he might try to influence the Fed, which he's not supposed to do, they're supposed to be independent. They if the economy grows faster because he cuts taxes, or the deficit gets bigger because of the tax cuts, yeah, their rates might back up, and that's what they're doing. They're backing up in anticipation of bigger deficits from his stimulus. Now, Trump's going to tell you that the tariffs are going to make up the difference and help pay down the deficit. And actually, one of his spokesmen, who's Howard from Cantor Fitzgerald, actually one of Jason's old bosses, he he's out telling everybody, well, well, we just had tariffs a long time ago. We had no income taxes, so, implying that, that if we start putting tariffs on people, might be able to get rid of the income tax. But
he's a great salesman, Howard.
Yeah, it's an interesting tease that he has, but I don't think they've gotten that deep into analyzing things. And of course, if our trading partners do what we want them to do, which is no tariffs, then Trump will not be putting a tariff on. He just likes to put tariffs on people that have been, well, according to Donald's terms, been messing with us for years and taking advantages for years. So he was attacking the German auto industry recently, and so we'll see if he has what is called tit for tat tariffs.
Well, it's really interesting because one area that I'm looking at, again, on those money flows, you asked about the BMI, Crystal. We see a trend every election year. So every election year since 1990, so that's 92, 96 onward, you see a pattern where institutional money flows move out of the market, and then literally after election day, it moves back in. And if you think about it, it makes a lot of sense, right? What does Wall Street hate? They hate uncertainty. They don't like uncertain outcomes. So they take risk off the table. And then when the outcome's known, they go back in and they buy stocks. So the big money index recently has been doing the opposite, went overbought, but now all of a sudden it's falling. So it's potentially following this same pattern. It'll be really interesting to see what happens after November 5th, if it's, all clear, and stocks start rising again. But this sort of factors into, so why would the big money index be bucking the trend? That's because right now, at the current moment, the election is a little more known than it was, say, in 2016 when it went down to the wire. Nobody knew what was happening. As Louie mentioned, Real Clear Politics has Trump, the White House favorite, as 60%, versus Kamala Harris now like 38% or something. There's margin of error in there. But that brings a little more stability to stock investors. However, we still have a week left for an October surprise. There's powder keg in the Middle East. There's all sorts of questions. But what happens is right after the election, that puts us in the middle of this seasonally strongest period of the year. November, since 1990, is up 73.5% of the time, with the strongest returns. I think the S&P is up around 2.3% on average in November. So, again, I feel like any dip is a buying opportunity, and any of these headlines that are potentially going to impact stocks is typically short term. The trend is up, in my opinion.
Yeah, I would certainly agree. You just don't want the election to be contested, So all Wall Street wants to know who's in charge, what are the rules, and hopefully we will not have anything contested. So whether it's Trump or Kamala, again, we don't want significant challenges or uncertainty. But it'll be interesting too. One thing we got to worry about is all these assassination attempts. The drone did hit Bibi's window on his home. Trump's assassination target, according to intelligence sources from Iran. So he just got to be careful. When he did the McDonald's photo shoot, apparently there were 28,000 people outside that franchise, and it got a little out of control. Obviously, he got in the building, did it, and was at the drive-through window, and his French fries he's very proud of. But 28,000 people around a McDonald's can create some chaos. So I think Secret Service was a little frustrated. So if and when he becomes president-elect, I think his service details will get even stronger. But there is this threat against him, and it's emanating from Iran for killing Soleimani. So we'll see what happens. And in the meantime, I think the Ayatollah he's living in a cave somewhere. I don't think he can come out. So we still have a lot of tension in the world that we have to resolve.
One of our subscribers asked about the BRICS summit.
That was interesting. I was late last week. Putin hosted the BRICS summit, and that, of course, includes Brazil, Russia, India, Turkey, lots of emerging market countries. And the summit was a little tense because they just wanted to end all the wars in the world, not only in the Middle East, but also between Russia and Ukraine. And the president of China was basically on Russia's case. You better hurry up and settle this because it's very disruptive. And I don't think Putin appreciated that pressure. Okay. And but they are right that we should end all these conflicts. It doesn't help anybody. It's what we really want to see next year is we want to see a peace dividend. Bill Clinton had a peace dividend, and economies grew and prospered. So the BRICS summit ended on a very odd note because the criticism of the wars, not only in the Middle East, but between Russia and China was very intense, and from leaders like President Xi from China.
Jason, I'd love to ask what stocks you like heading into the third quarter announcement season.
Oh, this is my favorite part of the chat, talking about stocks. I mean, I'm a stock nerd. That's what we love. I have so many, but there are a few that just kind of stand out to me. I really like ANET, Arista Networks. I've owned that for a long time. It's more than a 150% winner. They specialize in cloud networking. So they're the network switchers that sort of make the cloud run. And they're really working on an AI initiative to handle faster and better switching. This stock has phenomenal sales and earnings growth, tons of free cash flow, hardly any debt, great estimated sales and earnings growth. So I really like that one. They report November 8th, so right after the election, a couple days. One that already reported, it's a great stock, Intuitive Surgical. They make the Da Vinci robotic surgeon. So it's basically a giant tarantula-looking surgical robot. It's really been an industry leader in robotic surgeries, which globally have been up 23% global robotics procedures. So they're sort of pole position in the market. Great sales and earnings growth again, plenty of free cash flow, hardly any debt, great estimated sales and earnings growth. What's interesting is the number of hospitals that buy this surgical machine don't buy just one. As a matter of fact, the number of hospitals that bought 7 or more has quadrupled in the last 4 years. So that's one to keep an eye on. I like Parsons Corporation. So they basically provide technical design and software for engineering. They report, when do they report? October 30th. So next week. They have very strong sales and earnings growth. They do have a small but growing profit margin, plenty of free cash flow. They're estimated to grow earnings at a rate of, where did we go here? I lost my spot, 14.7%, and grow sales at 8% next year. So I like that one. And then there are just 2 more. Fortinet, FTNT, they report November 8th. They do cloud security, cybersecurity. So anyone who's been hacked, I think you're particularly sensitive. They hacked into my bank twice, made off with 30 grand. Luckily, the bank reimbursed the money. But, cybersecurity is a growing threat as we have more and more reliance on anything cloud. Again, they have phenomenal sales and earnings growth, plenty of free cash flow, great forecasted sales and earnings growth. And the last one is one that was sort of a prior beast, the Trade Desk. This is a stock that I made an 11x return on. They basically do, they're a technology company that facilitate ad buying. And in 2022, when tech was kind of being, held back, people thought it was over for people buying Google ads. Clearly, it wasn't the case. Trade Desk is back. It has tremendous sales and earnings growth, very profitable company, and tremendous forecasted sales and earnings growth. They report November 8th as well. I could go on all day, but I should probably stop.
Parsons, we own. It's a key holding of ours, so I'm glad that our systems overlap. The stocks I'm looking forward to in the upcoming weeks are Powell. Their sales are supposed to be up 37.3%. Earnings are forecasted to be up 82.1%. They've had positive analysis revisions. They have a huge earnings surprise history. This is a small cap. I call it a bunny stock. It sits at hops, but it's time to hop. We really do like Spotify. That's SPOT. Sales are forecast to rise 17.8%. Earnings are supposed to go up 416.7%. Very strong earnings surprise history. We have a stock called XBX Corporation. XBXC is the symbol. Earnings are supposed to be up 28.3%. Again, positive analysis revisions, strong earnings surprise history. That is a small cap, and it's time for it to hop, explode the upside. One we recommended on Friday is Sprouts Food Markets, and I actually have to give your mom credit. She found this before I did. Okay. Obviously, she shops there when she's in Southern Cal, and their sales are forecasted to be up 9.5%. Earnings are forecast to be up 16.9%. They have positive analysis revisions, a great earnings surprise history. Essentially, food costs are coming down, and the supermarkets are not cutting as fast. But Sprouts Food Markets, and they're also in Reno, where we have a home, they are an alternative to Whole Foods. And so if you like your food fresh, organic, that's one of the places you go. And very safe stock too, by the way. Another one we really like is Coca-Cola FEMSA. That's COKE. Now, this is the bottler of Coke in Latin America. And the Coke down there is totally different than the Coke we have in US. We use corn fructose to sweeten the Coke in America. South of the border, all the way to Latin America, they use cane sugar. So the Coke down there to actually taste better. It's more popular. And if you drink enough of it, you won't have to floss because there's a lot of sugar in it. But anyway, that's been one of our safest stocks. And finishing up here, we do like Guidewire. It's GWRE. They have positive ounce revisions, a very strong earnings surprise history. It's a nice, a large cap stock we like, and that's 5 weeks old. We've been recommending it. So it's going to be a great earnings announcement season. And then hopefully after the election, the uncertainty ends, and then we get rid of the wars in the world in the new year, and then we have a peace dividend and we rally. But as Jason mentioned, November is a very seasonally strong month. We often get an early January effect, which is a small cap surge. And if we get the January effect in November, usually just before Thanksgiving, then we'll get another one in January. So it's a nice 1-2 punch. So a lot to look forward to here.
So one stock you mentioned, Louie, that jumped off the page for me was Powell. Scores really well in our system. I was just looking at it, 1-year earnings growth of almost 300%, 3-year earnings growth of 750%. They do it all with zero debt, and they have 174 million in cash in the bank. So they're slated to grow earnings and sales next year, and I mean it ticks all the boxes from my side. So that's a really interesting one.
And Powell, I think I've mentioned in previous episodes, is a fundamental A stock. And it's very hard to get a fundamental A to be in the top 20% of sales, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, analyst earnings revisions, and earnings surprises. So when we find these fundamental A's, they're coveted and we buy them. And Powell's been a fundamental A for a long time. So it's a wonderful stock.
Perfect. Well, thank you so much to you both for answering all my questions and joining me this week. Thank you to you all for liking and subscribing and watching. And if you have any questions, as again, please put them in the comments below and we'll answer them next week. But until then, we'll see you next week. Thank you so much, Jason, for being here.
Thanks for having me. I love doing this anytime.